I have recently purchased an oil and gas company that has plummeted ever since they announced a recent acquisition of another oil and gas company. Many shareholders did not like this deal because of the excess amount of debt the company will have to take on to finance the deal, but at these prices I think it's very interesting and may be worth an investment. If you haven't guessed which company it is, the company I'm talking about is Occidental Petroleum. First, as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. In this video today, I will be looking at some basic information on the two companies, Occidental Petroleum and Untitled Petroleum, and the reasoning why I have recently purchased a small position in the company. Ever since Occidental Petroleum tried to overbid Chevron for Untitled Petroleum, the stock has plummeted. It didn't help that Untitled Petroleum preferred merging with Chevron over Occidental Petroleum, which forced Occidental Petroleum to pay a considerable premium for Untitled Petroleum. But around these levels, you're getting a 7.7% yield, which is fantastic, and some analysts are saying that this high dividend yield is safe as long as crude oil doesn't drop below $45 for a sustainable period. But at these prices, I think the company looks cheap but risky at the same time with the excess amount of debt, hence why I took a small position and I'm willing to wait it out to see how it plays out while collecting a 7.7% yield. Also note the amount of debt is not correct as it hasn't taken into account the new debt they have acquired in order to acquire Untitled Petroleum, and they are in the process of selling off some of their assets over the next 2 years to pay down their debt, so we'll be able to get a clearer picture as this plays out. First off, when we take a look at their yearly revenue over the years, we see a similar trend among them, but we do notice some dips in revenue back in 2009 and 2015, which coincides with the fall of crude oil back in 2008 and 2014. We see a similar trend with their cash flow that they earn every year, but it does fluctuate around quite a bit. But in the past decade, it has not been trending upwards, it's just been chopping around back and forth. But we also have to take into consideration that crude oil has dropped from over $100 a barrel to under $60 a barrel now. I also want to take a look at the amount they've been investing back into the business, and we do notice that in the past 5 years, investment has slowed down gradually. But can we really blame them, since the price of crude oil has collapsed back in 2014, and with lower oil prices, profit margin will also be hit. But where has all the cash flow been going if they're not investing back into the business? One thing we do notice is that Occidental Petroleum has clearly been buying back their shares, and I hope they continue that, because by reducing the amount of outstanding shares, they're actually increasing the earnings per share, and with the higher earnings per share, there's more room for them to grow their dividends. When we take a look at their yearly dividends, we can see just how insane the growth has been in Occidental Petroleum. Yes, in the recent 5 years it has slowed down, and I expect the dividend growth to remain lower for a while, especially as they are in the process of merging the two companies together. But we do notice that Untitled Petroleum has cut their dividends once, back in 2016, by over 80%. But by 2018, they have brought it back up almost to the same levels as they did before they cut it. But because of the massive dividend cut, which is restored about 2 years later, has messed up with the graphs for the dividend growth, but if we zoom in, we can still see the general trend. We see a nice ramp up in dividend growth, which they then slow back down. I don't expect to see the dividend growth growing like it did back in the days, but I do expect them to continue growing them, and I also expect them to continue to buy back more shares after you are done merging the two companies together and have stabilized. Another thing I would like to take a look at is their cash balance that they have on hand. We do notice that it is chopping around quite a bit, but the overall trend is upwards. It's always good to have some excess cash in your reserve, especially with oil chopping around a lot. And if oil prices are depressed for an extended period of time, this excess cash reserve will really come in handy. I would also like to take a look at their stock performance in comparison to crude oil, and we can see that the trend pretty much follows each other. But in my personal opinion, it looks like it's better to own the company than crude oil itself. First, we get paid the dividends, and second, the downwards are not as significant as the downwards in crude oil, but we do notice one deviation from the trend, and that is when Occidental Petroleum went into a bidding war for Untitled Petroleum. But this could present itself as a buying opportunity for us. When we took a look at their annualized return of Occidental Petroleum, the chart does not look pretty. In the past decade and a half, it looks like it fell off a cliff. We could be catching the falling knife here, so my position size is smaller than normal. I do see this as a riskier investment, but I'm willing to see how this plays out, and I can always add to my position later on if I feel more comfortable with the position. So why did I take this position in Occidental Petroleum? Well, one reason was because I feel that it is undervalued and the sell-off was overdone. Of course, that is just my opinion, but of course, it's also very attractive with a 7.7% dividend yield. Another reason is because Warren Buffett is in on this deal too. I would like to take a look at Warren Buffett's investment into Occidental Petroleum. Since Occidental Petroleum needed to raise more cash in order to fund the deal, they went to Buffett. Buffett invested $10 billion, and in return he received $10 billion worth of preferred stock, which pays an annual 8% dividend yield, and he can redeem the preferred shares for cash at 105% of the value in a minimum of 10 years. And on top of that, he got warrants, which allows him to buy up to 80 million shares at a price of $62.50, and the warrants would expire 1 year after he redeems the preferred stocks for cash. So if we purchase it today, we are receiving a yield of about 7.7%, which is not too far off from Buffett's 8% yield. The point I'm trying to get across is that if we purchase at these prices, we are kind of getting a similar deal to Buffett. Of course, it's not as good as his deal, since he does have a higher yield and warrants to buy stock. But we didn't have to put up $10 billion. We can purchase a much smaller stake, a tiny stake, a stake that we can mitigate the risk by having a diverse portfolio. Another reason that got me interested in this deal was because of Carl Icahn. He owns a stake in Occidental Petroleum, and he hates the deal. He thinks it's a terrible deal. He also claims that the deal that Buffett got was way too good, and that Buffett took the CEO of Occidental Petroleum, Vicky, to the cleaners. He even claims that he would have done the same deal without the warrants. Even Barron estimates that Occidental Petroleum could have just issued preferred stock in the open market at a 6.5% yield without the warrants as well. So overall, what we can take away from this is that Buffett probably got a good deal. Even though Carl Icahn hates the deal, when the deal was announced, the stock plummeted, and he accumulated more shares because he feels that it's undervalued. This is one of my more riskier investments, so I'm keeping this position small. With this deal, they are expecting to see about $3.5 billion in synergies and cost reductions, and they're expecting to reach this in 2021. But with the acquisition of Anadarko Petroleum, the company has taken on a lot of debt, but they are in the process of selling off some of the assets to reduce some of their risk. I also feel that the dividend is currently safe, especially since they did raise their dividends again this year after the acquisition. Because if it was not sustainable, why would they raise it? But I'm going to be keeping a close eye on this and seeing how this plays out. Let me know what you think of Occidental Petroleum in the comment section below. What do you think of the deal? Do you like the stock? Do you own it? And what do you think of the company? And as always, if you enjoyed the video, please like and share the video. I really appreciate it. And if you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you in the next video.